Hi Binoy, Apeksha and Kanan. Good morning.
Good morning, sir.
Good
Good morning,
morning.
Jugal.
Good morning, sir.
Hi Binoy, good morning. Hi Kanan.
Good morning, sir.
Good morning. Yes, so Apeksha and Binoy, you have been there earlier also, correct, in the equity and the economic session. I guess Kanan, this is your first session with me, right?
Yes, sir.
Yes, okay, fine. So did you went through the equity and economics recorded sessions? Also for Apeksha and Binoy, did you went through those topics again? Yes, no.
Yes,
Yes, okay.
Yes,
How
sir.
about Apeksha? Yes, okay, fine. Acha, I want to have a most interactive session, right? So let's keep on interacting. Correct. You can unmute yourself or and with audio also, and you can communicate via chat box also. Both I'm comfortable with, right? So any doubts from you guys? How was your experience? Were you able to solve the questions? Yes, no. Were you able to solve the questions for equity in eco? Apeksha, Binoy, Kannan.
economics, yes, equity, no.
Okay. In equity, where you are facing the issues?
Valuation,
Well, of course, but that's a very vague term. You haven't shared with me any of the doubts, I guess, yes, till now.
yes.
Yeah. So do share with me, Binoy, wherever you are facing the issues. I guess none of the and no one has shared with me anything. Is there anyone?
So I have sent 2 times.
Okay. I think I have reverted. Still, Apeksha, if you haven't got the revert, can you just ping me
No,
up
sir.
right now so that
Yeah,
after the session I'll be able to revert you back with the same, right?
yeah, sir, sure.
And believe me, do not wait for 24 hours or 48 hours to revert or the next session to start. Correct? Revert nahi mila. Just within 24 hours you don't get a revert. Please ping us. Correct? There is no doubt in that. Correct? Benoy, where you are facing the issue, which is the reading where you are facing the issue?
Uh, I don't know the name of the reading.
Okay,
Can I check and get back to you?
perfect, perfect. But do share with me, correct, without forgetting. And we need to
Yeah,
solve
sure.
that. Yeah.
Okay.
Okay. Yes, Kanan, did you went
Sir.
through the equity and the eco things, the recordings?
No, sir. I haven't gone through.
Okay, so you might be starting up with it now,
Sir.
huh?
Sir. Correct, sir.
Okay, right. So if you have any doubts, do let me know. Correct with it. I'm already added up in your
Okay,
group.
okay, sir.
I'm there. Still, I'm posting my contact details here in the chat box. Correct. It's a WhatsApp number also. So with this number, I'm there in your group also. If you have doubt, do ping me up over this number. Correct, in the private chat, and I'll be able to explain it to you. Correct. We
Sir.
need to resolve that. Yes. Hi, Smith. Good morning.
Good morning, sir.
Yes. So it's been long time. Correct. I was there with all of you in the very first sessions of eco and the equity. So, Smith, have you been able to complete the eco and the equity part at least once from your side?
Yes, sir. I revised. I went through it once, but I think I
Okay.
might have to go through it again after the portion is over.
Correct. So the revision would be required. Perfect. Fair.
Yes, sir.
Achha, one thing to all of you, how many of you have given the unit test till now? Subject-wise unit test. How many of you have appeared? Subject-wise unit test. Okay, fine. How many of you have started revising the things for the topics that has already been discussed? Topics that have already been discussed. Any revision? Anyone? No.
I do.
No, sir.
Okay.
Yes,
So yeah, actually
I do.
about the unit test, actually we didn't. I mean, I didn't have an idea of where to find
About
it.
the unit test?
I mean, as in like, is it on the portal or something?
Yes, it's there on the portal as a question bank.
Oh, actually, yeah. Actually, I thought that I might go through it after I'm done with the portion or something, because right
No,
now on during the weekends we have lectures and I have work during the week. So
correct. I would suggest start solving the questions at least, right? During the weekday, whenever you get a time, start solving the question. Okay, can I share some exercise to do? Can you give 15 to 20 minutes? Is it possible? 20 minutes thing? Is it possible? 20 minutes? Yes, no.
Yes.
Daily basis pe. Yes, 15 minutes possible, 15 to 20 minutes. Kannan, Apeksha,
Yes, sir.
Smith,
Yes,
I
sir.
want answers from everyone. Yes. If that's possible, can you do just one thing? See, most of your questions in L2 is going to be the case study based. Would you all agree with me? Yes, no. What you need to do is take any case study, correct? Whichever the subject that you want to go through, take any case study, start solving it daily, at least one case study. You can do it from ethics, you can do it from equity, economics, any subject that you want to. Every subject should be done at least once, correct? So you are yet to go through just 3 subjects, CI, AI, and the derivatives, correct? Except that 7 subjects are done. Agreed? Yes, no. And there has been a lot of case studies around 7 subjects. Yes, no. So what you can do is for the
Yes, sir.
next 1 week, daily basis page, you can plan that on Monday, say for example, you will go with economics, at least one case study. Tuesday, equity, correct? Wednesday, FSA. Make a timetable. Go through at least one case study. Can you all do it? Can you all commit to do it? Hi, Ketan. Good morning.
Good morning.
Yes. So, Ketan, this is your first session with me, right?
Yes, sir.
Yes. Okay. Okay. Fine. So, what I have just been discussing is there has been 7 subjects which has already been discussed, correct, in the batch. Revision is very important, correct? Keeping your mind, revising the things that whatever you have studied till now. For that, one thing that you could have done is daily basis pay, give 15 minutes. In 15 minutes, try to solve one case study only. Can I say one thing for sure, that average one case study is having 5 or 6 odd questions max? Yes, no. 6 questions in 15 minutes. How much time will it take per question? Almost 2.5 minutes. Agreed? Yes, no. Which is the time that is with you in exam also? Yes, no.
Yes, sir.
Start solving at least one case study per day, right? So this should be your target. Acha. Except this, anyone with any query with respect to how to start preparing for the exam or what should be the approach? Anything with that respect? Kannan, Ketan, Apeksha, Binoy, Smith, wherever you are facing the issues or anything. Anywhere. You can ask anything. Go ahead.
sir, I might have some doubts after like the portion is over and when I start revising every day about the exam and everything. So I might text you then, or call or something.
Absolutely, yes. Please do text us, correct? Whatever you have the doubt. See, doubt hai, if you have texted us, we would love to revert within maximum 24 hours. If you don't get a revert, correct, due to one or the other reason, it is missed out, correct? If we are full day in the office or in the session, we might missed out. If you don't get a revert, just ping us that this is a reminder. Please revert us on a priority basis, and we would love to revert it on time, correct? But if you keep sharing the things, correct, keep asking the doubt, आपके doubt बहुत easily solve हो जाएंगे, correct? And concept clarity is much more required. Would you all agree with me? Yes, no. Now, one thing with which I want to share with all of you, that is, of course, you are going to solve one case study per day. But what about the revision? Acha, how many of you can proudly say that I remember all the topics of the first subject that we discussed? All the topics. At least याद है कि इतने topics हमने discuss किए थे. What's the reason? 7 subjects have been done. Yes, please, Binoy.
I can give it a try.
Okay. Binoy is there one. Chalo, that's great. Super, Binoy. What about others? all the topics, revision, continuous revision has not been there. Would you all agree with me? Yes, no? That's the only reason. Yes, no?
Yes.
Yes, sir.
Yes. So one thing that you should be doing, at least on weekend, your session is going to be 9 to 1. On weekend, I would suggest whatever you are studying during the weekend after the session, out of that or in addition to that, whatever is comfortable to you. Let's say you are studying on weekend, except the session for 4 hours. Go for 4.5 hours. Correct? That half an hour, allocate referring to the cheat sheet. What is cheat sheet? Aware of it? Yes, no? A small note.
Yes, sir.
Correct?
No, sir.
Apeksha is there. Apeksha, it is available on the LMS?
No, sir. Still not available.
Okay. I'll have to check whether it's subject where it's available or not. Cheat sheet are must. Now, what is cheat sheet? So you can find it as a part of summary. Aapko, at the end of every that reading, there is summary given in the curriculum. Everyone is aware of that summary? Yes, no?
Yes, sir.
You can refer to that summary also, but in a very, that bird eye view thing. That will give you an idea that what has been there in every topic. Second thing, you may also refer to the cheat sheet, correct, which is there on the LMS, right? Do search for it. You will find it. If you don't find it, get in touch with the coordinator. They can guide you, right, about the cheat sheets, or you can get in touch with me also, right? But again, on the portal thing, coordinator would be the right person, wherein you will be able to find out the cheat sheet. Start referring to those cheat sheets or the summary from the curriculum end. How much time does a summary take? Summary is long enough for 50-60 page. That session reading is there for 50-60 or 100 page. Summary will be there in just 2 pages. Is it better to at least go through the summary? Yes, no? Ayush, good morning. Correct.
Morning, sir.
Can you all?
Yes.
Yes. So can you all just start going through the summary? Yes,
Yes,
no?
sir.
Just give half an hour, not more than that. But at least half an hour karoge na, which is so things will get revised and revised in your correct. At least these topics are there. And believe me, at level 2, how many of you have felt that there are a lot of small topics are also there at level 2? How many of you have felt that?
Yes, sir.
The small topics. Yes. Everyone else also, yes, no? Or was it just me and Ayush?
Yes.
Yes, sir.
Yes. Correct. And have you marked that when you are doing the case study, they have been checking multiple points in the same case, right? So it is better that you keep on revising the points in your mind, correct, again and again. And the best way is going through the cheat sheets or some other way on a regular basis, correct? Okay. So this is the one thing that you should be doing on a regular basis, right? Let's begin up with the discussion around the new topic for the day, right? As well as the third last subject, that is corporate issuers. Shuru kare the discussion. Yes, now. So now at level 2, what is the one thing that you have found is at the center? What is the one thing is at the center for level 2? Level 1 may basic fundamentals was at the center. Yes, no. Center point was you should be clear with the basic fundamentals of the equity market, fixed income market, and portfolio management. Would you agree with me? Yes, no. Now, level 2, what is the basic center or that most important topic that they want to clarify with? What do you feel? You have done FSA, equity, economics, and many other subjects. What do you felt at level 2? What is the center point? What is their main aim? And Bino also mentioned it earlier. Valuations. Maybe valuation, maybe go for the bond, maybe for the equity. Can I say the valuation was at the center point? Yes, no, for level 2. Yes, no.
Yes, sir.
Yes. Valuation of
And
currency swap.
valuation of currencies, and believe me, in fact, at in the derivatives, you will find a lot of things around the valuations about this options valuations, swap valuation, currency swap valuation. That is going to be there in the derivatives portion, right? So valuation is going to be the center point for level 2. Acha, by the way, if I talk to you about the equity valuation, then which is the most basic method that we have been following since now? Gordon's growth model, DDA model. Agreed?
DD.
And your first topic of CI is also around this, the analysis of dividends and share repurchases. Correct. How it is going to help you. So this reading is basically focused around, whenever a company is, okay, we have already discussed in the equity, if you can recall from that point, or when you are going to go through the recordings of equity, we are very sure that we need to forecast the dividend. Agreed? We have also discussed the way in which you can forecast the dividend, the financial modeling wala thing. Remember? Just how to forecast the revenue, how to forecast the cost of goods sold, how to forecast the raw material prices. Remember? Yes, no. Now, when a company is coming up with dividend, then how it could be interpreted? Is it appreciated by all the shareholders or not? Can I say that discussion around that is also important? The reason is, what if the company is not paying dividend? What if the company is not paying dividend? Which model would you use? Company is not paying the dividend. Which model can you use to do the valuation? There is a whole reading around that.
Free cash flow.
Absolutely right. Free cash flow model. Can you all recall? Yes, no. Free cash flow to equity and the free cash flow to firm. Yes, no. Smith, Binoy,
Yes, sir.
Prachi. Yes.
Yes, sir.
Correct. So you can use a free cash flow model. But again, what if operating cash flow is negative and the cash flow for the equity holders are also negative? Then what else? It's possible, fairly possible for the startup companies. For startups, it is possible. Yes, no. What will you use then? Then there is the relative valuation, PE ratio, PB ratio. Remember, price to sales, price to cash flow ratios. The comparative
Yes, sir.
or the relative measures. Yes. If that can also not be very very much comparable, then वो भी compare नहीं कर सकते, तो you can shift to asset based valuation model. The market value of the asset minus the market value of the liability, you will be left with the net worth for the equity holders. Remember, if that also doesn't work, you can go with EV to EBITDA multiple. And at last, which is the last stage, and if all of this doesn't work, then only one thing is there, with that is company may get dissoluted also. Yes, no. Yes, no. In that case, you may have a residual income model.
Well,
Remember,
income.
residual one. So these are the things, but we start with the Gordon's growth model. Agreed? And can I say in Gordon's growth model, we were required to forecast the dividends? Yes, no. Now, if I talk about a company which is a blue chip company, large cap company, in large cap company, do you expect there will be a continuous dividend? Yes, no. In large cap companies, do we expect a continuous dividend? Yes, no. Achha, everyone is comfortable with Hindi and English both, right? Or is there anyone who want me to go in English?
Yes, sir.
Yes. Okay. Perfect. So, if any, what about EBITDA multiple? You can go with that also, Vinay. Yes, that's fair. You can go with that also, EBITDA. So, if you're talking about large cap company, then in that case of large cap company, what will happen is, can I say we are expecting a regular dividends? Yes, no. Yes, no.
Yes.
Yes. Now, recently TCS, anyone following TCS recently? with the dividend history? Is there anyone who has been following TCS with the recent dividend history? Okay, give me a second. I'll try to share with you something. Just a second. Okay, so here it is. Yeah, here is the dividend history of TCS, right? Now, if you see, let us start from 2018, correct? Look at the dividend history. This is 2018 ka dividend, right? How much was the total dividend? 7 plus 29, correct? This is the dividend per share. 7 rupees plus 29 rupees. So 36 plus 4, 40, 40 plus 4, 44, 44 plus 4, 49. Agreed? Yes, no. Have you marked? Final dividend has been around 29 rupees. All others are interim. With me? What is interim? What is interim dividend?
सर जो quarterly होता है
Quarterly. Perfect. So quarterly, when the result comes, and if they want to, in between the year, they want to announce the dividend, then it is going to be the interim. What is final? Annualized. So March quarter mein that is going to be the final dividend of the whole year. That is going to be annualized one. Agreed? Yes, no? Okay.
Yes.
Now the total dividend has been around 44 rupees. Sorry, 736, 36 plus 12. 36 plus 12, yeah. 48 rupees. Agreed? 2018 ka. Let us look at 2019. Here is the financial year 2019 that is beginning, correct? June 19 se. Look at this. Till this point. Look at this. What's the dividend? 18 plus 5. Achha, there is one more thing which is completely different. Have you found one special dividend? Yes, no. Which is for the year 2019 has been even higher than the final dividend. Would you agree with me? Yes, no. Yes, no. So why this kind of special dividend has been given? Question mark for us? Yes, no. Now, if I
Yes.
ask you when we are forecasting with the dividend discount model, you will be going through the D1, D2, D3, D4, D5. Correct. Now we have forecasted the dividends. Can you forecast the special dividend? It is unusual. Would you agree with me? Yes, no. Special dividend is not given every year. Final and the interim dividend is there. Special dividend is not there every year. Would you agree? Last year ka total dividend was 48 rupees. This year only special dividend has been 40 rupees per share. Special dividend is completely different. Yes, no, it's irregular. Can you include it in your analysis? No, it would be there. Would you agree with me? There should be some different indication with the special dividend would be there. Yes or no? That is what is that. That the reason behind it, the interpretation behind the special dividend. That is what we are going to look at. I want to show you one more specifically for the 2023. See, here it is. Look at the dividend that has been given. Total dividend for the year 2022-23. 22 plus 8 plus 8. Almost 38 plus 8. That is 46. 46 plus 67. Correct. What is the total dividend? Almost 112 rupees. Agreed? Yes, no?
Yes.
Now, before 2 years, it was just 48 rupees pure saal ka for the whole year. This year, it has been 112 rupees. Some difference must be there. What is the reason that they might have given this higher dividend? And on the other hand, we have been saying there is expectations about the IT business slowdown. Everyone has heard of it? Yes, no. Expectation
Yeah.
of slow. Yes. And on the other side, they are distributing a lot of dividends. Some correlation must be there. Correlation must be there. Yes, no. That is explained here in this reading. As a equity or debt investor, analyzing the dividend and the share repurchase, how it has been interpreted. That is what we are going to look at in the today's session, right? What is the focus of the reading? So the focus of this reading is going to be about the effect of regular dividends. Regular dividend was there as a part of two names. Which were the names? Final dividend and the interim dividend. This is what we have just seen. Extra dividend. What is extra dividend? So it could be interim dividend or it could be special dividend. What is liquidating dividend? Residual income kind of thing. Yes, no. When company is going to get dissolved. Agreed? There could be stock dividend. The stock is given as a dividend. Stock split, reverse stock split. Have you heard of reverse stock split with any of the stocks? Aware of it?
Yeah, I'm
Any
aware,
stock which
but I've
is
never seen it.
okay. It has been there earlier with one of the company named Nirma. Aware of it? Nirma. Nirma University is there in Ahmedabad, Gujarat. Aware of that? Yes, no.
Yes.
And that Nirma is having many other businesses also. Have you heard of the one of the northeast area, one of the largest cement company, Nuvoco, which is also a listed one.
Yes. Yes.
It is started by none other than Nirma Group of companies, only person by Patel, where this reverse stock split in one of his older companies, the reverse stock split has taken place. We are going to look at it, correct? How it is used and how it is going to impact the shareholders' wealth and the company's financial ratios also. Then the most important one, the theories of dividend policy. Whenever a company is deciding the theory, whether to go ahead with the dividend or not, what are the things that they consider? Correct. How would they go for the dividend policy, deciding the dividend policy? Can I say dividend policy is clear to you, then it becomes very easy for us to forecast the dividends. Correct.
Yeah.
Explaining the implications of each for the shareholder value, given a description of corporate dividend action. Describe types of information signals, very important one, signals that dividend initiation, increase or decrease and omission may convey. At last, we will be in the today's session, we are going to focus upon the agency cost. What is agency cost? Heard of it anywhere? Agency cost kya tha? Anyone who has heard of it? Agency cost? Yes, no?
Yes.
कहाँ पे था? I want answers from everyone. कहाँ पे था? Binoy.
I
Where have you
don't
heard about
remember.
it?
I don't remember. I heard.
Okay. What is agency cost according to you? What is agency cost? You can answer, but there is no issues. You can fluke if you want, correct? But answer whatever you think about the agency cost. What is agency cost?
Associated with that such kind of actions.
Cost of such kind of actions. Okay. So cost of issuing the dividend you are talking about?
Yes, sir. Like stock dividend or stock splits or whatever actions mentioned in this one.
Okay. Fair.
Agency cost is caused by the conflict of interest between management and the shareholders.
Perfect. Absolutely right, Binoy. If I say that management is there, who is interest is saying that they should be having increase in the compensation, right? Now, when I'm talking about that compensation is increasing only if the earnings per share is going to increase, EPS is going to increase, right? If that is a clause, what should be the focus of the manager? Can I say manager would be looking on just one thing, that is increase in EPS at any cost? Yes, no? Now, if I talk to you that company wants to increase the EPS, what is the way to increase the EPS? What is the best way to increase the EPS?
Increase the profit.
Increase the profit. Kaise? Increasing the revenue. Now, in the revenues, when you're increasing, is there a chance that the companies, the professional company, the manager might issue a fake bill, or even increasing the credit period, issuing a fake bill? Can it lead to higher revenue? Yes. No?
Yes.
But is it a legitimate revenue? No. Can I say,
But
as a shareholder, yeah, sure, Vinod, go ahead.
but Jugal, issuing fake bills will cause unnecessary tax impact, no?
Correct? Possible? So tax
Then
is there.
that's
Let's say you are earning normal revenue, or the the legitimate is 100 rupees ka revenue. Correct? Now you are earning, let's say, recording a revenue of 110 rupees. In 100 rupees, you are paying 30 rupees as a tax. Can I say in 110 you will pay 33 rupees as a tax? Yes, no, 30% of it.
Yeah.
Net, can I say 70 rupees is the profit? And here your profit is going to be 107 rupees. Sorry, 77 rupees, ma'am. 77 rupees. Yes, no. Can I say your profit has increased? EPS has increased by 10%. Better.
yes,
Trade
Yes.
receivables may increase. Trade receivable will increase. With that, there are chances that your profit will also increase. EPS increases. As a shareholder of the company, would you like this action? Is it in your favor?
Yeah.
Is it in your favor as a shareholder of the company?
So that the profit increases.
Profit is increasing, but at what cost? Trade
Quality of
receivable.
that.
earnings.
Trade receivable. Is it
Yeah.
increasing the value for the shareholders? No. Agreed? Can I say this is nothing but the agency cost, because the owners and the managers of the company are different. Agreed? Because the owner and the managers are different, both have the conflict of interest. One wants a higher compensation, one wants an increase in the value of the company. This is the agency cost. Conflict of interest is there? Yes, no. Let me share with you something. In fact, I'm not very sure if we have discussed around this earlier or not. Did we discuss around the balance sheet of Denji? Did we discuss around
Yes,
that
sir.
balance?
Yes, sir.
Yes.
Yes, sir.
Okay. I would suggest those who are yet to go through it, please, when you go through the equity sessions, so in equity we discussed around that, correct? When we were talking about specifically the trade receivable one, go through that. You will find the trade receivable is suddenly increasing with the increase in sales. Now, try to have your own interpretation, correct? That is the best example, practical example for the agency cost. At last, we will be looking at the effect of dividend policy in practice. So when you are having different policies, then how it is going to affect the tax rate in practical terms, how it is affecting the choices. Calculate and interpreting the tax rate, the most important part. Recently the budget came in. How many of you watched the budget very closely? How many of you watched the budget closely? Anyone? Indian budget? How many of you looked at it closely?
Yes, sir.
Yes. Okay. Apeksha is there. What about others? What about others? Binay, Kannan, Ketan, Prachi, Smith, Nigam, Ayush.
Sir, couldn't watch it.
Okay. Okay. What about others? We are going to take a lot of examples. Correct. Second recommendation from my side to all of you. Whatever is happening in the Indian economy must go through that. Recently, the Adani related cases are taking place. Yes, no. Well,
Yes,
we
sir.
are not against it. We are not with it. I'm just saying you should be aware of what is happening. How the Heidenberg is, hedging their position, how they are making the short positions, correct? Or what exactly are the allegations, how it can impact the valuations for the stockholders. By the way, have you marked that they have been correcting a lot since a while? Now, what is the reason? Or you would mark even that many of the stock may be well below their original or the proper valuation point also. Would you all agree with me? Yes, no? Now, what is the reason for that? Anyone, that why they are correcting a lot? Or why the institutional investor have not yet started buying it even after correction of 50% in many of the stocks? Anyone can try. Again, that is going to be a part of CI only. But try it out. What could be the reason?
Or maybe because the fact that the shareholder trust has shaken up so much because of the whole conspiracy, that even if the institutional investors put in their money, it's very hard for the business to capture that original reputation that it had and to make the business going.
Fair, perfectly correct. So Prachi, what you are trying to say is that because the trust has shaken up, so that's why people are feeling that there is much more higher risk to the stock.
Yeah.
Because there is a higher risk, can I say we as an investor on a this rational basis, we would ask for a higher risk premium.
Yeah.
When you're looking for the risk premium, ideally the discounting rate would increase, the cost of capital should increase.
Yes.
And Gordon's growth model, if you can recall, D1 upon R minus G. If R is going up, what would happen to the value of the stock? Should it go down? Intrinsic value will decline. याद आ रहा है ऐसा कुछ? Anyone who can recall? D1 by R minus G. The formula
Yes, it will
that we
decline.
discussed.
Yes.
It will decline.
If R is increasing, this whole thing will go down. Intrinsic value declines. Can I say this is the same thing that we studied in the theory portion of equity, of course, and today it is being applied, that because the risk is increasing, the intrinsic value for the company declines. How it is related to the CI then? Can I say CI has been talking a lot of things around WACC, weighted average cost of capital. It is about cost of equity and the cost of debt. Would you agree with me? Can I say cost of equity generally is more than the cost of debt? Yes, no? What is the reason that cost of equity is higher than cost of debt? Risk premium? Perfect. Otherwise than that, if considering the equity does not have a risk, then can I say cost of debt and cost of equity could be same? You will say, how is it possible? RF plus beta into RM, RF plus beta into RM minus RF, CAPM model from level 1. Remember, the risk premium was there only due to risk. This correct. If this is not there, then can I say bond yield plus risk premium was the another method that we solved? Yes, no. So if bond yield is there with the equity, both cost will become equal? Yes, no? Yes, no?
Yes.
As the equity holder of the company, what is your reward? Dividend only. Can I say if dividend is very stable dividend, then as the equity holder, my risk will decline. If risk declines, can I say R will go down? If R goes down, can I say cost of equity can reduce? Yes, no. And if cost of equity reduces, certainty is increasing, R is going down, can I say overall valuation, intrinsic value will increase? Have you found that many of the companies who are giving regular dividends have been given much better valuations comparative to the market stocks, other companies of the market? Yes, no? Yes, no? The valuation that is there with many companies which are regular dividend payments are having comparatively better valuations. Would you agree with me? Yes, no? The reason is this, that there is a lower risk. Would you all agree with me? Yes, no?
Yes, sir.
So compare the stable dividend with the constant dividend payout and calculate the dividend under each of the policies. So that's what we are going to do. the broader trends in the corporate payout policies. Will be the discussion of the tomorrow. The correct share repurchasing methods, comparing the effect of share repurchase and how it is going to affect the balance sheet, correct, or the P&L. Calculating the effect of share repurchase on the book value of share. Choices between cash dividend and repurchase of shares. Very important one. Okay. Can I say, if you as a company owner wants to reward your shareholder, how can you do it? One is dividend, then
Bonus.
bonus, fair. What else? Dividend, bonus, then
Rights.
right issue, correct. You are issuing the shares to the existing shareholder at a lower price, fair. What else?
Jugal, can you repeat the question? I missed that.
Sure. My question is that if you as a owner or the managers of the company, you want to reward your shareholder, how can you do it? So the answers that I've received is cash dividend, rights, bonus issue.
Capital gains.
Capital gains, but that is not in your hand, right? That is a market's hand.
Okay.
Yeah. Repurchase of the shares at a higher price, that is what done by TCS. The prices of the stock in market was 3,700, 3,800, and at that time they are announcing the buyback or the repurchase of share at 4,500. Can I say that 700 rupees is nothing but the gain for the TCS shareholders? Yes, no?
Yes.
Yes. They could issue the stock dividend also. But when you are choosing between cash dividend or a repurchasing of the stocks, what is more preferred by the different shareholder? At last, dividend coverage ratio, something new. Correct. We have looked at interest coverage ratio earlier. Kya tha interest coverage ratio? EBIT upon interest, remember? Yes, no?
Yes, sir.
Sir.
Yes. Just like that, there is a dividend coverage ratio also possible based on net income and based on free cash flow. Why two different things? Reason. Can I say, when we are talking about net income, it will include the trade receivables also? Yes, no? When we talk about free cash flow, then we are talking about just the cash from operations that is at hand. Would you agree with me? Identifying the characteristics of the company that may not be able to sustain their cash dividends. If the company is not able to sustain the cash dividend, can you apply GGM model, Gordon's growth model? No. Clear? So this is going to be our discussion here in the first reading. Let's begin up, shall we? Just give me a second. I'll have a glass of water and then we will be going ahead. Just a minute. Okay, let's begin up. Everyone is clear till this point. Any doubt from anyone about any of the topic that we have just gone through? Any doubt from anyone or clear? If you're clear, please write in the chat box and let me know if you're clear. Clear yahan tak, everyone? Binoy clear, Kannan clear, Nigam, Ayush clear, okay. Apeksha clear, okay. Prachi clear
Yes, sir, clear.
till this point?
Yes.
Okay, fine. Smith clear? Smith clear?
Yes.
Okay, perfect. Let's discuss around the expected effect of regular cash paying dividend, extra dividend, liquidating dividend, stock dividends, stock split, reverse stock split on the shareholders' wealth and the company's financial ratio. Now, the regular cash dividend. What is regular cash dividend? Did you found in case of TCS, every quarter on an average some dividend is being paid out? Yes, no. We know it with the different names, interim dividend and the final dividend. Or at the end of every year, can I say on an average for all the years they have long history of paying up some amount as a dividend? Yes, no.
Yes.
They are a part of regular cash dividend. Periodic dividend payment made in cash known as regular cash dividend. Now, which are the companies that will be doing this? So the companies, they are looking forward to have a stability in the regular cash dividend. They will be increasing them very slowly. Correct. And on the other hand, they will also refrain from reducing the dividend drastically. Have you found in case of TCS that specifically if you total up the regular dividends, means final and the interim, can I say it was very nearby to each other? Yes, no. Yes, no. 5 rupees here and there, but not much of the difference in the final and the interim dividend only. Yes, no. Do you want me to show you the chart again? Do you want me to show you the chart again? Let me just share with you. So if you see here in the year 2018, since 18, correct? Or let's take 17 also. Yeah. In 17, look at the final dividend. 27 and a half. Yes, no. The 16-17 ka year. The final dividend of 27 till this point. Agreed? 27 plus 6 and a half, 6 and a half. Agreed? Yes, no. Look
Yes.
at this year. Again, this is 16-17. Look at 17-18. 27 and a half, 7-7-7. Almost nearby to 16-17. In the 17-18 also. Yes, no. Let us look at 2018-19. 29-4-4-4. Same thing. Yes, no. Can I say somewhere they are trying to maintain their ratio? Yes, no. Let me, for this reason, let me show you one more company. Look at this. This is given in percentage. Let me go to the money control only. Yeah, here it is. Okay. So now if you see every year since 15, look at the dividend history. Every year they are just giving one dividend, that is the final dividend. Can I say they are maintaining around 1 rupees? Yes, no. Yes, no.
Yes.
Yes. So can I say most of the companies wants the dividend to be very constant. They are, when they are increasing it, they will increase them slowly, and they are refrained from reduction also. Yes, no. And what is the reason behind it? The stable or increasing dividend paid regularly are perceived as a sign of consistent and growing profitability. Can I say if they are being consistent and expected to growth, having a growth of profitability, then at the end of the day, can I say the stability is higher, consistency is higher, risk for the equity investors will go down. Yes, no? If the risk is going down, can I say cost of equity will go down? Would you agree with me? overall WACC will go down. Yes, no? And return on capital employed, these ratios will be affected. Would you agree with me? Yes, no? Yes, no? Yes, in some of the countries, companies can have dividend reinvestment plan also. What is dividend reinvestment plan? So in general case in India, can I say we are finding it out that dividend is paid out directly to the bank accounts, correct? Whichever is linked with your banks, that unit account, demat units, right? There are many countries which allows for dividend reinvestment plan also. Then this plan has been very famous with mutual funds, to be precise, correct? Mutual funds के case में, how many of you have been investing in the mutual fund or dealing with the mutual fund? Is there anyone who is dealing with the mutual fund
Yes,
or
sir.
investing? Yes. Have you found in all the mutual funds you are given two options, whether to go with the growth plan or a dividend plan?
Yes, sir.
When clicking on the dividend, you get two things: dividend reinvestment and the dividend payout.
Yes, sir.
Mark, yeah?
Yes.
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 ICDW, right?
ICDW, yes, but that is a dividend withdrawal. That is dividend withdrawal, right? The dividend will be paid out. Hello.
Yes, sir.
Yes, sir.
Yes. So that is nothing but DRP, dividend reinvestment plan, right? There is one more option available with the payout or the dividend reinvestment. Currently, we are talking about dividend reinvestment. By the way, one of the fund is there, mutual fund. Again, I'm not marketing the fund, but just saying that fund has been promoted a lot because of its regular cash dividends. Have you heard of this fund named HDFC Prudence Fund?
Yes.
12% dividend was consistently given, and many of the banks were promoting it, saying that this can give you 12% consistently. Again, was it possible? No. When market goes down, it will become quite difficult for the fund to pay out that much dividend. Now, the question is not around that. The question is around, can I say the fund has been paying the regular cash dividend? Yes, it was there. And that's why it was being promoted also in the market, correct? Same as there is another thing also, which is DRIP or DRP, dividend reinvestment plan. At the shareholders request, automatically it will invest or reinvest or partly invest regular cash dividends in the existing shares and having additional shares. These additional shares could be purchased from the open market also, or it could be newly issued shares also. Can I say, if it's a newly issued share, is it good for the company? Yes, no? What do you think? Can you please repeat? Can you please repeat? Is it good or not? What do you think?
No, sir, it's not good.
Okay. Why, Ketan?
So because the number of shares outstanding increases, which
So?
decreases the EPS and increases the PE.
Correct. But that is happening for the existing shareholders, right? And existing shareholders are going to receive that dividend also.
Yes.
So the existing shareholders are getting benefited in this. When we talk about the PE ratio, can I say PE ratio will get adjusted? I mean, if PE of 10 is to be given, prices will get adjusted. Let's say currently you are holding 100 shares. Okay. Currently you are holding 100 shares. PE ratio is 10. EPS is 1. Can I say the price per share would be 10? Yes, no?
Yes.
Yes. So total amount that is going to be there with you, the market value is going to be 1000. Agreed? Now, in case if the company is issuing the dividend, due to that, can I say this one may become 0.90? The EPS will fall.
Yes.
The price, what will happen to the shares? Can I say, instead of 100 shares, now you will have let's say 10% shares have been given extra, so you'll have 11 shares, sorry, 110 shares. 10% dividend था, that has been reinvested. 110 shares हो गया आपके पास, multiplied by what should be the P ratio? P ratio is 10. Can I say prices will fall to 9? Multiply करो, you will get the almost same number, 990. Almost same हुआ, almost 10 rupees here and there. But are you getting the same number? Are you at a disadvantage in reality? Are you in disadvantage?
Yes.
Yes, कैसे? Not able to hear you. Hello. Vinay, what do you think? Kannan, Ayush, Prachi, Smith, Apeksha.
Sir, could you repeat the question again? I missed out on this part.
Sure. My question is, if the company is going for dividend reinvestment plan in the stocks and they are issuing the new stocks, is it beneficial to the shareholders or is it not a beneficial one?
It can be interpreted in both the ways.
Okay.
It is
Tell
neither.
me one reason. Huh. Go ahead. Chalo, give me the reason according to you, whichever you think that it's in good, then why it is good. If it is not good, then why it is not good.
Okay, it is not good because it can pass a message to the market that the company is having a cash flow crisis or company doesn't have enough money to pay dividends. Okay, that's why they are planning to finance. That is one message that can pass to the market. Second thing is that good in the sense the wealth of the shareholders increase. That is the good part.
How does the wealth of the shareholders will increase?
Means the shareholders holding will increase. They convert the dividend to shares now.
So shareholders are getting
shareholders holding will
extra
increase.
dividend. Okay. Well, okay. Just a counter argument on both things. That first thing that you have shared that it is going to give a negative signal because they are just utilizing the money inside. So are you mixing up retained earnings concept with the dividend reinvestment plan? Because what you're talking is a retained earnings.
Yes.
When companies reinvesting the money, they will say that we have issued this much dividend and against that we are giving you this much shares, right? So not a negative signal. Agreed? The second one that you shared that it is a positive thing. That means you are saying the shareholders' wealth will increase, but in reality, as correctly mentioned by Ketan, that it will not affect shareholders at all. Why? Prices will get adjusted according to PE ratios. Agreed, Ketan?
Yes, sir.
No? Yes. So ideally, that's not the thing. But have you
Sir,
heard of? Please go ahead. Go ahead. Yes.
also from like from the management's I mean from the company's perspective, this is beneficial because it basically helps them with maintaining that cash rather than giving that cash out in the form of dividends.
Fair.
So
You're right.
For the company's so then how does market perceives this? Like since the company, like this can be one of the possible reasons in order to maintain the cash, the company is not giving out dividends and rather giving stock dividends. So is it a negative signal for the market in that case, like for the investor?
No, it is not a negative signal.
Okay.
In fact, this is good. In one of the opinion, the opinion is, can I say there is a flotation cost which is associated? What is flotation cost? Level one concept.
Raise funds.
Cost paid to?
Raise funds.
Perfectly correct. Flotation cost, the cost paid to investment bankers, which ranges from 3% to 7%. Can I say that cost will be saved? Second thing,
Yeah.
Can I say if the cost is being saved, that means cost of equity will also come down? Is it good for the shareholders and the company or not?
Yeah, got it.
Yes. Correct. So it is a positive thing. Would you all agree with me? Yes, no. There are some disadvantages also. Absolutely, yes. So the for the company, DRP would promote diverse base of shareholders. The DRPs would provide a cost-effective opportunities for the smaller shareholder to accumulate the shares also. DRPs would also promote long-term investments. New issues, DRPs would allow companies to raise additional capital without the flotation cost. This is what we just discussed. DRPs would offer shareholders a number of advantages also, such as, can I say, it will allow for purchase of additional stocks without a transaction cost? Yes, no. Is there a transaction cost associated with this DRPs? Zero transaction cost. Would you agree with me? Yes, no. Yes, no. The second one, can I say DRPs would also allow shareholders to benefit from the cost averaging. What is cost averaging? What is cost averaging? Let's say the number of stocks that you purchased at a price of 100 rupees. Now, can I say because the dividend has been issued, the price of the stock will go down? Yes, no? Yes, no?
Yes.
In that case, can I say you will be able to purchase the share, or you will be getting the shares at a lower price? Can I say it is going to benefit you in terms of cost averaging? Third one, many times DRPs are also issued at a discounted price than the market price. Again, it's better. So these are the three benefits. Let us look at the disadvantages. Every coin has two sides. Yes, no. So the disadvantage of DRP is that, can I say, for tax purpose, can I say you would be getting the stock at a lower price. So for tax purpose, you will have to pay the stock, the tax on dividend, the cash that you did not receive till now in hand. Would you agree with me? But उसके ऊपर tax तो देना पड़ेगा ना? Yes, no. You have to pay the tax today itself. Yes, no. So for tax purpose, can I say record keeping will become somewhat difficult? Yes, no. Yes, no.
Yes.
What if by the time dividend is getting announced and it's their stocks are being purchased, by the time, what if the market prices have increased and the dividend has been reinvested at a higher price? Can I say that is going to backfire to you also, with average cost basis increasing? The third one, can I say dividends are fully taxed in the year in which they are being paid? Even if they are reinvested, can I say you will still have to pay the tax on it? Yes or no? In US, in US, not in India, in US only, this is available, the tax sheltered account. What is tax sheltered account? If you are purchasing or investing any securities in that account, then you will have to pay zero tax. Zero tax in that account, known as retirement accounts. Have you heard of Roth IRS? Yes, no. In US taxation, have you heard of Roth
Yes, sir.
IRA? Yes, that is the example of this. Correct. That is a tax sheltered account wherein you don't have to pay any tax on the dividend that you are earning on the stocks that are held in that retirement account. Right? Is it good? Yes, no.
Yes.
Yes, it's absolutely good. It's there in US, not in India. Correct. Chalo, second one. So first one was the final or the regular dividends. Second one, did we saw in case of TCS that there has been lot of irregular dividends, such as special dividend. Last year, in the 2019, the special dividend was 40 rupees. correct? Current year, the special dividend has been 67 rupees per share. Agreed? What is special dividend or what is extra irregular dividend and how it is to be interpreted? A cash dividend, which supplements a regular dividend or a dividend of a company that normally that does not pay, correct, is known as a special dividend. Special dividends are paid under the unusual conditions only, under the expectation that dividend is not recurring. Very important one. What are unusual conditions? What has happened with TCS? Can I say IT stocks or IT industry has been earning a lot since 2018-19? Yes, no. They have been into the flavors. Yes, no. Yes, no. Because of automations. Yes, no.
Yes, sir.
2019 May, for the first time, can I say as soon as IT companies have started earning better, a lot of IT companies have given special dividends, not just TCS but many others also. By the way, can I say the one more thing is also there, that this is a sign that when they are saying that it is a special dividend, then it is a sign that it is not a recurring one. Agreed?
Yes.
Extra dividend is paid only if the company has especially profitable year but does not want to commit higher ongoing regular dividend payment, because in case if there is higher expectation about the regular dividends and one fine day you don't get that much dividend, can I say D1 D2 then D3 will drop suddenly. If D3 drops, can I say the fourth, fifth and sixth year valuation is dependent upon the expectation of dividend of third year only. Would you agree with me? If third year dividend drops, can I say fourth, fifth and sixth year dividend will also get affected? Overall, the intrinsic value will be affected due to this? Yes, no? Yes, no? When they are getting affected,
Yes.
overall prices will go down. And that's why what they're saying, when it's a regular dividend, then you can do the forecasting based on that. But when it's irregular dividend, special dividend, consider it as an not a recurring one, correct? Non-recurring dividend, right? It is paid by the company when the whole firm or a part of firm is sold, when dividends are in excess of cumulative retained earnings are paid, resulting in reduction of a stated capital. Also, liquidating dividend is considered as a return of capital as opposed to return on capital, correct? So can I say irregular dividends or the special dividend can also be interpreted as if the company is not finding much of the chance to reinvest the money and expand further? Yes or no? Yes, no? If the company is issuing the higher dividend, can we say that the company is finding out that in future they are not having much of the near future, they are not looking for the much of the expansion plans? Would you agree with me?
Yes, sir.
This has been the case with IT industry, and can I say Amazon and many other companies, even in the IT industry, they are going through the layoff season. They are going through the layoff season. So can I say it is fairly possible that when the company is already into the higher growth portion, at that time, because of the much higher profit, they may issue the dividend, or else the company may be expecting that over the next 1 or 2 years they might not be having a growth opportunity, and that's why they are giving out the better or the irregular dividend. Agreed? Yes, no? A special dividend possible?
Yes, sir.
Yes. Now it is also possible that if the company is going through the that liquidating season, correct, at that time they may provide liquidating dividend, right? So do not exchange the regular or the special dividend with liquidating dividend. Liquidating dividend is completely different concept than the irregular or the special dividend also. Clear? Yes, no. Liquidating dividend could also be paid when company is selling off their one of the operations. Correct? If one of the part of the company is sold off, can I say that part will generate a cash for the equity shareholders of the current company? Yes or no? They might be given special dividends. Clear? Yes, no?
Sir, I didn't understand the part like that statement where it says when dividends in excess of cumulative retained earnings.
Okay.
Like,
Okay. So let's say you have currently the as per the last year retained earnings are 100 crores. Correct? Now, if I am paying up the dividend of 150 crores, is it possible? Retained
sorry, sir,
earnings
could you
will be
repeat that?
100. Sure. In case if you are having today, no, the retained earning that is total 100 crores. The dividend payout is more than 100 crores. Is it possible?
No.
No. Question mark is there? Yes, no.
Yeah.
So that extra money has to be borrowed or extra money has to be arranged.
Yes.
From where will you get that extra money? Let's say you had one of the operations, one of the business of, let's say, some XYZ business was there. That business is also being sold off by you. Can I say that money is received by selling of the extra business? You might have got 50 crores. Yes, no. Because in retained earnings, what is going to be there? Can I
Yeah.
say in retained earning there will be the profit for the all past years, which is not distributed as a dividend. If I'm paying beyond it, that means, can I say I must have sold one of the business?
Yes.
Clear, Abhi?
Yeah, got it. Thank you, sir.
Yes, welcome. So it is paid by the company when the whole firm or a part of the firm is sold, or when dividend is in excess of cumulative retained earnings. Liquidating dividend is considered to be return of capital rather than return on capital. Both things are different. What is return of capital? Liquidation things are there. When one of the unit is being sold off, that is a return of capital. What is return on capital? The return on capital is by investing that much money in the equity of the company, what is going to be the net profit of the company? Can I say the net profit of the company is considered as ROE? Yes, no, which help us to find out ROE, return on equity, or return on capital, that is ROCE. Remember, return on capital employed.
Yes, sir.
Yes, sir.
EBIT upon sorry, not EBIT, but net operating profit, NOPAT, net operating profit after tax, divided by the capital employed, right? So that is a return on capital. Liquidating dividend is a return of capital. Next, the stock dividend. This is a non-cash dividend paid in form of additional shares known as stock dividend. Correct. After payment of stock dividend, the shareholders will have more shares. The cost per share will be lower. The total cost will remain the same. The shareholders' proportionate ownership of the company does not change because every shareholder is going to receive in the same proportion. Shareholders are usually not taxed on stock dividends because the market value of the company is unchanged. Market price per share declines, leaving the shareholders with no gains. Okay, what is this? Discuss the DRIP, DRP, dividend reinvestment plans. Yes, no. DRIP. Yes, no. Remember, just a bit discuss kiya with the cash dividend. Yes, no. Yes. Now, in case of DRIP, what was happening is the company is issuing the dividend first in terms of cash, and then that cash, instead of that cash, or instead of that, once you get the cash, you are reinvesting that much money to purchase the new shares. Agreed? That was the story. Again, in that case, can I say you were taxed on the dividend? Yes, no. Even if you are getting the shares.
Yes.
Now, here the stock dividend is there. In case of stock dividend, you are directly given the stocks. instead of going for the dividend, you are directly given just the stock. Can I say stock is having a monetary value, but the gain is realized only when you are selling it off. Till the time you don't sell it off, will there be any gain to pay the tax on? Will there be any gain to pay the tax on?
No.
No, because there is no gain which is booked today. Will you be taxed? No. Clear? The market value of the company will remain unchanged. Market price per share will decline. Why would it decline? The example that I shared with Ketan. Ketan ne jo bataya tha na, that P ratio is not going to change. Remember, the prices of the stock may reduce. So overall, will you be looking out to have a net gain? Maybe not. For some of the shares, can I say you may make a capital loss? Would you agree with me? Yes, no?
Yes, sir.
Yes. So this is the stock dividend. Going ahead from the stock dividend, we have companies which consider stock dividend desirable because they encourage long-term investing only. Can I say when they are investing, when they are directly issuing the stock dividend, it is beneficial for the company also. Can I say it will reduce their cost of equity capital? How? How would it decrease their cost of equity capital? They have directly given the stocks? Yes, no? Valuation is done? Valuation is done at all? Cost of equity has been measured? No. Would you agree with me? Yes, no? Also, can I say flotation cost will be very less? Almost none flotation cost? Yes or no?
Yes, sir.
Yes, sir.
Yes. Beneficial हुआ company के लिए. On the other end, the stock dividend will also have to increase the stock float. If the float is increasing, the liquidity of the listed stock is increasing. Can I say the stock dividend may also be used to decrease the market price of the stock, making it or taking it down to the desirable stock range that would attract more investor, making it a highly liquid stock, so that, can I say, many of the small or the retail investors can also take a part in it. For example, MRF. MRF stock price is 93,000. Yes, no? Recently, MRF gave one of the dividend. Anyone knows what was the dividend?
3 rupees.
3 rupees.
Correct. So, itna zyada dividend mila, right? So, how many of the people have been investing in the MRF? Very few. Yes, no? Because very few people are investing in MRF, due to this, what has happened? Can I say the liquidity of the stock of MRF is not there? Yes, no? Yes, no? Because
sir.
they announced just 3 rupees dividend on the stock of 93,000, can I say many of the investors or the larger investors started selling it off. As soon as they started selling it off, can I say the prices fell down by 6, 7%, 8%? Yes, no? I don't remember. I saw it around 5% down once at least. Yes, no? MRF stock corrected a lot. Why was it corrected? Because there was very less demand. Would you agree with me? Yes, no? Yes, no? Because of the lesser demand?
Yes, sir.
Yes. And why was there a less demand? Less participation by the retail investors. Agreed? Clear?
Yes.
This is the benefit of going through the stock dividend. The companies that continues to pay same regular cash dividend per share following the stock dividend have effectively increased their cash dividend also. The companies that pay out same total amount of cash dividend as before would effectively decrease the dividend per share through the dividend yield would be unchanged, because dividends and price decrease by the same percentage. Can I say because of the stock dividend? Yes, no? if the stock dividend is given, okay, what would happen to the price? If the stock dividend is given, what would happen to the price? Increase or decrease? Decrease. When the price of the stock has decreased, right? What will happen to the cash dividend now? Can I say cash dividend might be staying the same? Dividend will yield. What would happen to the dividend yield? Can I say dividend yield will increase in this case? Yes, no?
Yes.
Yes. Correct. Can I say, in case if you as a company want to maintain the same dividend yield, can I say you could have given lesser dividend also? Would you agree with me? Yes, no? Yes, no?
Yes.
Yes.
Sir, can you just repeat it?
Sure, I'll repeat. The companies that continue to pay the same regular cash dividend per share after the stock dividend, can I say they have effectively increased their cash dividend? Kaise? Let's say earlier the company has been paying dividend of 1 rupee per share. You are currently holding 100 shares. What is your total dividend? 100 rupees. Now the stock dividend has been given. As soon as the stock dividend is given, 10%, can I say now we are having 110 shares? Yes, no?
Yes, sir.
1 rupee per share is the dividend. What is your total dividend? 110.
Sir.
Effectively, can I say the cash dividend has increased because you have paid for 100 shares only? You have got 10 shares without any incurring any further cost. Would you agree with me? So effectively, now can I say the per share your dividend has increased to 1.10? Yes, no?
Yes, sir. Okay.
Clear
Understood.
now?
Clear.
Yes. Yes. So however, the companies that paying out the same total amount of dividend as before, if the payout ratio is same, can I say if payout ratio is same, I am going to pay only 100 rupees as a dividend to you. You are currently having 110 shares. What is going to be the dividend per share? Will it decline? Almost 0.90? Yes, no? नहीं पता
Yes, sir.
चला. पता चला? Clear everyone or confused? Let me just share it with few numbers. Okay? Let's say companies that are paying out the same amount of cash dividend as before, the same dividend payout ratio basically. If as a company I have decided I will pay 100 crore rupees as a dividend, fixed, right? Earlier there were only 1 lakh shares. What will be the dividend per share? 1 lakh nahi, let's keep it 100 crore share. Currently there are 100 crore shares also. What is going to be the dividend? 1 rupee per share? Yes, no? Now, in case if I am still going to pay 100 crore rupees as a dividend, that is amount of cash dividend is staying the same as before, same payout ratio. यहाँ पे instead of 100 crore, now we have 110 crore shares. What will happen to the dividend? $0.90 decreases the dividend per share. Yes, no? Dividend per share कम हुआ. What will happen to the dividend yield? Can I say here the price, the price per stock, market price, let's say was 100. Can I say after the stock dividend, this market price per share will also reduce to 90? Yes, no? Yes, no? Market price per share would also reduce to 90. When they are reducing to 90, can I say in both the case, you are having 1% of the money that is given a that is the dividend yield. So dividend yield would remain unchanged. Yes, no.
Yes.
Yes. This happened because dividend and the price both decreased by 10% only, same percentage. Clear? Important one. Conclusion. Take a screenshot if you want. Kya tha clear? Shall I go ahead? Yes, no. Hello. Acha, before I go ahead, do you want to take a break or shall I continue?
Break.
Break is required? Okay. ठीक है. How many minutes of break? 10 minutes?
Yes, sir.
Okay. Let's take a break of 10 minutes. Correct? And then we will begin up. Okay, so everyone is back from the break. Shall we begin up? Apeksha, Binay, Kannan, Ketan,
Yes,
Ayush,
sir.
Prachi, Smith, back from the break? Yes. Okay,
Yes, sir.
fine. Okay, so let's begin up with our discussion around the dividend paying methodologies and the thought from it. And the fifth way to pay the dividend is by way of stock split. What is stock split? Stock split is nothing but a kind of stock dividend, but this is in very large size. Okay, if there is a 2-for-1 stock is given, correct, then it is 100% stock dividend. Yes, no? Yes, no? There could be reverse stock split wherein there is very less number of examples for the reverse stock split. Again, can I say when reverse stock split is done, then 2 shares will become a single share? Yes, no? Is it appreciated by any of the shareholders? Will public shareholders appreciate this? Yes, no? What do you think? What do you think? Will they
No.
appreciate? No. Why? What's the reason that they won't appreciate?
The price of the stock increases and the amount of investors reduces.
Okay. Okay. So then why this concept would have even been made? Is it a flawless concept or some flaw is there? There is a flaw, right? It is not good for the investors, right? Then who would use this concept? Who would use this concept? What do you think? What do you think? कौन use करेगा इस concept को? Anyone, you can try. It can be, fluke, but try करो.
Companies with large market cap
Okay. So what?
and companies without, less liquidity in terms of cash, and then companies who wants to save cost of capital and like other costs such as transaction costs, rotation costs. So they
Okay.
may try.
ठीक है. But due to this action, shareholders are not getting anything, right? In fact, if they had 100 shares, now they will have 50 shares only. If they are going for stock reverse split, then agreed? Yes, no? Yes, no?
Yes, sir.
So why would they do it? This was done by the Nirma group of companies which I mentioned you, right? Remember in the beginning, they did it with what the purpose was. Understand the purpose. They were looking at delisting the company, correct? Now, can I say, if you want to delist your company, you need to buy back the shares from the existing shareholders? Yes, no? Yes, no?
Yes.
Yes.
That was planned by Vedanta also earlier. Vedanta also planned for the
Yes.
delisting the
Yes,
shares.
yes.
Yes.
And they gave lot of buyback offers also. Did people participated? Did
No.
people participated? No. Why? Can I say people were expecting a lot of good things from the Vedanta? Now, can I say Vedanta is already paying a higher dividend paying stock? Yes, no? Vedanta is currently paying much better dividend than the past. So that
Yeah.
means, can I say Vedanta management was very well aware that they will be able to make a good dividend in coming future, maybe next 1 or 2 years. And at that point, they want to keep it with themselves because they are the one who is doing all the hard works and people are getting dividend without doing anything. Agreed? Just investing in the company. Yes, no? So just like this, Nirma also tried for this buyback. No one was ready to give them the stocks back. So what they did is, they went with a reverse stock split. Because the company's major shareholding was in the hands of promoters. Can I say approval for the reverse stock split will be there because of the voting power? They took the approval. After the approval, what will happen? They combined 1,000 shares, made it equal to 1 share. 1,000 shares becomes equal to 1 share. Reverse stock split. What are the chances that people will be having 1,000 shares in one single name?
Very less.
Very less. So let's say you are holding 500 shares only. In that case, what will happen? Half share can be allotted to you? No. Can I say for those 500 shares, you will be given cash? Yes. Who will pay the cash? Company will pay you the cash. And that 500 shares will become equal to 0. Company will make a payment of that 500 shares to you. Getting me? Yes, no?
Yes.
Now.
What I'm not understanding is how will it help?
Sorry, repeat again.
What I'm not understanding is the part where how it will help them in delisting. Like it should
Correct.
in fact actually not help them with delisting.
It will help them. Because now the remaining 40% stock, can I say that is also in the hands of promoters only? Yes, no? Because why it is in the hands of promoter? Because the promoter is already having more than 1,000 shares. Agreed? So they will be the one who will be having most of the stock, right? Remaining other small investors, they would not be having 1,000 shares in their account. So can I say they will be paid out cash and the stocks will be bought back from them mandatorily? Now who is having all the power? Promoters of the company only, or the MDC only. Would you agree with me? Now they want to delist the company. Can they do it? Yes.
Yeah.
They don't need votes from anyone. It is that, oh no, all the shareholding is with them only. Getting me?
Okay.
Yes. And after that, Nirma has become such a such a great company now. Correct. It has a lot of businesses, cash generating businesses also. Correct.
So basically, this was for stock splits, right? And not for reverse stock
splits. This was for the reverse stock split.
Okay.
Reverse stock split. See, stock split, what used to happen is if you are currently holding the stock of 10 rupees, correct, the face value of the stock is 10 rupees. In the stock split, the same stock will be divided into 2 parts, 5 rupees each, face value. Clear?
Okay.
In the reverse stock split, what is happening is if you're currently holding the stock of 5 rupees each, face value, it will be combined and made 10 rupees ka face value wala stock.
Acha, okay. Okay.
So this is what they tried at that point of time, and that's why when they came up with IPO about the Nuvoco, many of the foreign institutional investors as well as many other old investors stayed away from the IPO. And even today, the price of Nuvoco, even after being a profitable company, it has not been able to touch its IPO price. Can I say the proper valuation is not given by the market? Yes, no. Reason is this. Clear? The intent of reverse stock split is similar to that of regular stock split also many times. Correct? Why? Let's say currently your stock is trading at 1 rupee or 2 rupee. Your stock is a penny stock. Would people like to purchase it? Yes, no. Can I say many people will stay away from the penny stocks? Yes, no?
Yeah.
Yes. So when the prices are increasing, would you like to purchase it at that point only? Yes. So can I say to attract different investors to the low priced stock, what they do? Many times they go with the reverse stock split so that the price of the company starts increasing. Many people starts investing in the company than this only. Correct. As we have seen that it is not in the favor of many of the other retail investors, right? And that's why it was considered illegal in Japan till 2001. Correct. Clear? Yes, no?
Yes.
Yes. The next one around the dividend issuance is accounting issues which will also get resolved to a certain extent because the cash dividend is paid, reduces the cash flow as well as shareholders equity also. How does the shareholders equity is getting reduced? Because if it is distributed, correct, retained earnings or the dividend is distributed, can I say shareholders equity will decline? Yes, no? Yes, no?
Yeah.
But if the liquidity is declining with the payment of dividend, if liquidity is declining, can I say quick ratio, current ratio will also decline? You equity is declining, so higher debt to equity ratio will be there. And can I say debt to asset ratio will also increase? The leverage will be increasing. Yes, no? Yes, no?
Yes.
Stock dividend. If it's a stock dividend, तो क्या होगा? Cash is going out of your company? No. Agreed? Cash is not going out. On the other hand, yes, please.
Could you explain that part again? वो higher leverage कैसे रहेगा?
Sure. Higher leverage. Leverage is measured by debt to equity ratio.
Yes.
If the shareholders equity is declining, the denominator is decreasing in debt to equity,
Oh yeah, okay. ठीक है, got
overall
it.
leverage will increase. Perfect. Okay. Next one. If stock dividend is given, can I say stock dividend is given, then in fact, rather than reduction in the equity, it is the increase in the equity. Leverage will improvise. Liquidity ratio will not be affected at all. Quick ratio will staying the same. Agreed? Yes, no? Yes, no?
Yes.
At the end of the day, shareholders equity, the issued share capital will increase, retained earnings will go down, net equity will be unchanged. Clear? Clear?
Sir, why will retained earnings go down?
Correct. So when you are issuing the equity, correct, new stock equity, can I say retained earnings is a part of reserves and surplus?
Yes.
Can you issue the equity out of reserves and surplus? Yes. But then can I say issued share capital should increase?
Yeah.
But the money is coming in. There is no money which is coming into the company. Agreed?
From retained. Okay.
So retained earnings will decline.
Okay.
Issued capital will increase. Overall equity will be same. Okay. So these are the accounting issues. If you are paying the cash dividend, so it is preferred that you pay the stock dividend, right? Okay. Now, यहाँ तक everyone is clear? Yes, no? Yes, no?
Yes.
Everyone is clear to this point? Yes. So this was on the front of setting up the basics for issuing the dividend. Now, the different theories behind issuance of dividend is also there. Correct? Implication of each of the share value given a description of corporate dividend action. The first policy that many of the companies or the shareholder might be looking at is dividend irrelevance. Dividend irrelevance. Have you heard of Modiglani and Miller model? Have you heard of this model at level 1?
Yes.
Yes. What was there in the model? Tough question.
Yeah.
It was like level 1. कहाँ याद होगा? ठीक है. Let me remind you. MM1 and MM2 model was there. In MM1, we were saying that there is no tax, no transaction cost, nothing is there. It's a perfect competition. Remember? Cost is very low, taxes were not there. And Modiglani and Miller, model 2, which was saying there is a tax, then what will happen? याद है ऐसा कुछ? ऐसा कुछ? If there is no tax, if there is no tax, then whether you go with cost of equity or whether you go with cost of debt, both are same for you. Whether you go with cost of equity and whether you go with the cost of debt, both will remain same. So
Yes.
whether you have debt to equity ratio in 60-40 or you have 40-60 debt to equity, both are one and the same. ऐसा कुछ याद है?
Yes, sir.
The dividend relevance theory is dependent upon MM1 model, which says it has no effect on the price of firm's stock or its cost of capital. First one, why there is no effect on cost of capital? Can I say MM1 model suggested no tax, everything, the transaction cost is going to be nil. In that case, no benefit whether you go with cost of equity or cost of debt, both will be same, remember?
Yes,
So
sir.
cost of capital change नहीं हुआ. If cost of capital doesn't change, in that case, R will change? No. Correct, in the Gordon's growth model. If R doesn't change, any changes to the stock price is expected?
No.
No. So, the dividend, the dividend is nothing. But can I say if you are reinvesting the dividend into the equity, then ideally your retained earnings goes up, shareholders' equity is increasing. Ideally, it should not make any difference to you. Yes, no. Yes, no. Hello. Fair sir. In case if you are not paying any dividend, can I say it will be added up to the equity of the company? Rather than borrowing the money and using, or raising new money and using, you have got the net profit of the company as a retained earnings. Would you agree with me? By not paying the dividend? Yes, no. If you would be paying the dividend, then can I say you would have to raise the debt capital?
Yeah, because we don't have that extra cash flows.
Exactly. Or else, can I say you would have to raise the equity? When you're
Yes.
raising the equity or when you're raising the debt, there will be flotation cost. Agreed?
Yes.
But we have already assumed that there is no transaction cost. So that has also become zero. Agreed? So can I say, based on this, can I say the paying of the dividend is irrelevant? Yes, no. Paid to pay the dividend or not to pay the dividend, it doesn't have any impact on the corporate structure according to the MM model. Agreed?
Given that it is MM1 model, right?
MM1, yes, without any taxes and that all other things are zero. The transaction cost, information cost, everything is zero then. Agreed?
Yeah.
Yeah. So MM's argument of dividend relevance is based on the concept of homemade dividend. Assume, for example, you are a stakeholder. You don't like the company's dividend policy. The firm's cash dividend is very high, big. You can just take the excess cash received, use it to buy more of the firm's stock. The cash dividend received was too small. Can I say you can sell a little bit of your existing stock in the firm to get the cash flow you want? Yes, no? Yes, no?
Yes.
Let's say you are looking at the dividend of, let's say, in total 1 lakh rupees. Okay. If the company has given you the dividend of 2 lakh rupees, can you reinvest that 1 lakh rupees? Yes. In case if you want 1 lakh rupees as a dividend, company has given 50,000 rupees as dividend. Can you sell off some of the equity shares of the company for the 50,000 and you will be able to maintain it? Agreed? Yes, no? Yes, no?
Yes.
In both the cases, can I say end of the day you are ending up with 1 lakh only? Now dividend policy has been modified according to your needs. Yes, no? Yes, no? In both cases you are earning 1 lakh only. Yes, no?
Yeah.
And this will be proper only if there is no tax, no brokerage cost, infinitely divisible share. MM1 model only. Yes, no? You should also note that discussion pertains the firm's total payout policy. Correct? Firm's total payout policy rather than the narrow dividend policy or smaller dividend policy. Clear? Yes, no? अब MM1 मॉडल में क्या था? In detail, if you cannot recall, I would suggest refer to that once. Do you all have the that level 1 ka material available with you? Yes, no? Just if you don't have, do let me know. Correct? I'll share something in group. Comfortable? Must go through the MM1 model. Can you all do it? Yes, no? Yes, no? So that
Yes.
you will be able to recall
Yes, sir.
what has been discussed earlier, right? So this is the first theory. According to this theory, based on MM1 model, we say that dividend payment or non-dividend payment dividend policy is irrelevant. Correct? From the firm's perspective as well as the stockholders' perspective. Going to the second one, the bird in the hand theory. Now, what is bird in hand? Bird in hand basically means, can I say, if you are keeping the cash flow of the company with you, you can do whatever you want to do. Yes, no? You can do whatever you want to do with that money. Yes, no?
Yes.
Yes. So that is what we call as a bird in the hand, right? When MM is concluding that dividend is irrelevant, they mean investors don't care about the firm's dividend policy since they can create their own cash flow. Kaise? If they are getting higher cash than the expected one, they will reinvest the extra money. And if they get lower cash flow, they will sell off the stock and recover the remaining money. Agreed? If they don't care, the firm's dividend policy will not affect the firm's stock prices also. Agreed? And dividend policy will not affect the firm's required rate of return also. Would you agree with me? Yes, no, till this point.
Okay.
There has been Gordon and John Litner. They said RS is nothing but the notation for return on equity capital. RS will decline as the dividend payout increases. क्यों ऐसा? How can the cost of equity would decline with the increase in dividend payout? Is it possible? What can be the reason?
So could you repeat the question again?
Sure. How can a cost of equity declines if the company is issuing a dividend? By the way, this is the point that we discussed earlier also. If there is a stable dividend, lesser risk. If lesser risk, basically, can I say the risk premium is declining? Risk premium declines, can I say end of the day, cost of equity will go down? Remember? Because
sir.
the investors are less certain of receiving future capital gains from the reinvested retained earnings than they are from receiving the current payment of the dividend, right? Can I say, if I'm paying up the dividend today upfront, and the another one is, let's say Smith is there who is not paying the dividend, we both are in the same industry. I'm saying that you take the dividend today itself. Smith is saying, I will reinvest this money in some project and I will earn the money from that project and then I'll give you higher dividend. Can I say, in my company it is certain that you will get the dividend? In Smith's company, can I say there is a risk? Risk is whether the project will earn the profit or not. If that profit does not, that project does not earn the profit, will you make a money? No. The risk is high. Yes, because the risk is high in the other option, can I say in my company cost of equity will go down? Yes, no? Yes, no?
Yes.
Yes. They base this argument on the fact that when measuring total return, dividend yield component has lesser risk, correct, than the growth component, right?
Yes.
Yes. Chalo, the third theory. पहला theory कौन सा था? Dividend irrelevance. Second theory has been around bird in the hand, correct? And the third theory that talks about tax aversion. What is tax aversion? Okay. What is the tax structure in India? Anyone is aware of it with respect to dividend? How dividend is going to get taxed? Anyone knows?
In the hand of shareholders from 10% to 20, I think.
10 to 20? No. It
So
is
there's a
directly
minimum
getting.
amount, उसके ऊपर ही dividend का वो.
Sorry, repeat again.
Sir, I think there's a minimum amount of the dividend that we have to receive in order to be able to pay tax. On
That is more than 5,000. If you receive more
Exactly.
than 5,000
So
tax.
correct. So that's a bare minimum one. So that is okay. So it is going to get taxed? Yes, no. On an average. Agar,
Yes.
tell me if see, honestly, few things are there just, given as a dikhta hai. End of the day, it is not going to help. Agreed. If I'm saying 5,000 rupees ka dividend, that's like nothing. Yes, no. Simply,
Yes.
if 5,000 rupees ka dividend you are receiving, that means what would be your income? Can I say investment is very less? Your income would be below 7 lakhs, and below 7 lakhs, you don't have to pay the tax also. So, वैसे भी it is not going to help. Agreed? Yes, no. So, let us forget about that deduction given. But if I talk to you about, then what is the tax rate for dividend? Above 5,000. Slab tax rate बोल सकते हैं? Yes, no. Slab wise, whichever the slab in which you fall, for that slab you will have to pay the tax. If you're falling in 30%, can I say you need to pay the tax of 30% of the dividend? Would you agree with me? Yes, no?
Yes.
Yes. अच्छा चलो ये तो एक हो गया dividend. Tell me what is going to the tax rate for capital gains? Capital gains tax rate.
So it's short term it's 15 and long term it's 10.
Perfectly correct answer. Short term में 15, long term में 10%. Tell me what should you prefer? Should you prefer to receive dividend or should you prefer the reinvestment of the dividend? Looking at the tax rate.
Reinvestment.
Reinvestments. Why? Better capital gain expected.
Yeah.
And when you are selling off that stock with a better capital gain, how much is the tax? 15 or 10%. But if you're getting that tax, getting that dividend, what will the tax rate? 30%. Would you agree with me? Yes, no? Yes. So in many countries, dividends are historically been taxed at a higher rate than the capital gain, and we are one of them, right? Dividends were taxed on an ordinary income with higher rate as high as 39.1% also in many of the countries. With long-term capital gains are at 15 or 10%. Correct? Many places it is 20%. Under such situation, according to the tax aversion theory, can I say you would not like to pay the taxes higher? Yes, no?
Sir,
Hmm.
so if I sell two stocks where in one stock I'm making a profit of 20%, somewhere around 10,000, and in the other one I'm making a loss of 10,000, तो उस पे मुझे tax ही रहेगा.
Okay. So in this
If I
case,
sell it together.
नहीं, tax रहने के chance है. I'll tell you how. You have to check whether it's a short term or the long term. In case if the both things are long term beyond 1 year, so you are right. In case if both are short term, you are correct. With me? If
Yes.
one of them is a short term and one of them is a long term, so short term loss cannot be short term loss cannot be set off against long term gains, but long term loss can be set off against short term gains. So which is देखना पड़ेगा, the other place where you are booking the loss, is it a long term or the short term? If it's a long term, then yes, you can do it. If it's a short term, then it's not possible to set off. Correct? तो आपको क्या करना पड़ेगा? टैक्स भी देना पड़ेगा, उसके ऊपर you will be booking the losses also. Getting me? Yes, no?
Yes.
Yes. Okay. Fine. So overall, when the dividends are taxed, at that point there will be tax aversion. from the investor's point of view, right? In the real world, tax laws often prevent companies from accumulating excess earnings, also making dividend payments necessary. In 2003, the tax laws in US changed so far that dividends and long-term capital gains are booked at the same rate, 15%. Can I say when both are booked at a same rate of 15%, is there any difference between a dividend and non-dividend payment? No. Dividend will become irrelevant. Would you agree with me? Yes, no?
Yes.
Yes. So here is the conclusion. Results are unclear. Which will be the best one? Correct? Let's look at all three of them. The research is suggesting higher tax rate do result in lower dividend payouts. Achha, by the way, how can you affect a dividend payout because of higher tax? Can you do it? Can you do it?
So you didn't get the question.
I am asking, they are saying the conclusion is that the first conclusion, which says the countries in which there is a very high tax rate, they are having lower dividend payout ratios. How is it possible? How can a tax rate of the individual person can even change the dividend policy?
So because people, I mean, if the company pays out the dividend, the person who gets the dividend will have to pay tax on it. And if they don't, then the company will just receive the gains in the future and they can set it off with the losses and they don't have to pay the tax.
My question is with that, one thing is tax is at individual level, yes or no?
Yes.
If company wants to announce the dividend, how can you deny that I will not get the dividend? Please add my money to the retained earnings. Is it there available?
I don't think so. You can just reinvest it, but you can't.
Exactly. Nothing beyond it. So, can you, as an individual investor, affect the company's dividend policy? Ideally, no.
No.
Agreed. Dividend to be announced, that is to be passed as a resolution in AGM, yes or no? Can I say voting will be done whether the dividend is to be announced or not? Yes, no? And in that case, what maximum of the investors will opt out for? To issue the dividend or not to issue the dividend? If for the larger shareholder, issuance of the dividend is not required by them, then what they will say? What they will say? Please add it to the retained earnings. Would you agree with me? Yes, no? Yes, no? Hello?
Sir, but sir, like not a lot of investors do attend the AGMs.
Correct. So whoever have attempted the AGM and whoever, whatever the decisions taken over there will be the final one. Correct. And that's why it is very important that whether you have the higher number of shares or lower number of shares, you should always vote. And for that reason, government has already started up with e-voting. Aware of it? Now, as the many of the companies are coming up with the results, a lot of the e-voting notices might have been there in your mail accounts. Check. It may be there from the LinkedIn and many others. Clear? Yes, no? Yes, no? Clear? Hello?
Yes, sir.
Yes. Okay. The second one, that is empirical evidences with respect to the support of bird in the hand. What is bird in the hand theory? The companies that pay dividend are perceived as less risky. Specific group of investors do prefer dividend paying stocks only. Correct? Simple the bird in the hand. Can I say many investors are looking forward to get the dividend at any cost? Yes, no? and many investors are there who are not looking for the dividend. Can I say those who are looking for the dividend will be investing in large cap companies or the public sector companies which are having proven track record of the dividend? Agreed? Yes, no?
Yes, sir.
Yes. The third one, countered this argument by saying that different dividend policies appeal to our different clienteles, and that since all types of client are active in the marketplace, dividend policy has no effect on the market value of the clienteles that are satisfied. Clear? Yes, no? So all three of them have their individual characteristics. You need to remember the conclusion lines. Clear? Or shall I go ahead? Everyone is clear to this point. Shall I go ahead? Yes, no?
Yes, sir.
Yes.
Yes. Okay. The types of information or the signals that the division initiation increasing. What is the signal that will be passing on to the market if you are omitting certain of the dividends? Correct. If you are adding up or increasing the dividends suddenly, what is the signal that is being passed on to the market? So here is the first one about the information asymmetry. What is information asymmetry? Can I say the directors of the company would be well aware of the financial situation of the company compared to you or me? Yes, no? Such as what happened with
Yes.
Vedanta. In case of Vedanta, okay, Vedanta recently came up with semiconductor plant somewhere in Gujarat. Yes, no? Aware of it? Now Vedanta is one of the early starters in this area within India. Yes, no? Aware of it? Yes, no?
Yes.
Yes. So now, can I say Vedanta starts to paying out such a huge dividend recently, coming up with semiconductor plant, and just before a year, almost a year, they came up with stock buyback. Can you connect the dots about information?
Yes, sir.
asymmetry? Yes, the board and the management might be having much more information, right, as compared to the investors. Can I say dividend will convey much more credible information to the investors as compared to the plain statement? This is because dividends entail a actual cash flow, which is expected to be sticky or same for the future. And that means, can I say, as a TCS, HDFC Bank, Reliance, these people have been paying up regular dividends. What does it show? Can I say it shows that they are certain that in the coming years at least this much profit they can make? Yes, no? Yes, no?
Sir, so is that the reason the buyback can go as planned?
Sorry, repeat again.
Also, when you are talking about Vedanta, is the the information asymmetry the reason the buyback can go as planned? Because the investors knew that the company will be making good.
Absolutely. So this is what it looks like, correct? This is what it looks like, because see, when you're looking for the buyback and you're looking forward that management and the promoters will be there, they are going to be safe, they are just buying back the shares from the public shareholders only, they want to get it delisted. What does it mean? It means they want to get the whole business back in their own hand, because they're expecting in the next 6 to 8 months or 1 year or 2 year there will be huge profit that they will be making. Correct. And by the way, before you invest in any of the company, did we discuss in equity that you must do the background check for the MD CEO? Yes, no? Qualitative things? Yes, no? If you can do, search out for Anil Agrawal and his previous companies. In one of his previous company, that company was also a listed company. Buyback hua. After a buyback, company did well. and they got it listed again at a higher price. Correct? Getting me? Yes, no. So can I say that shows that company's promoter might do this kind of step? Yes, no.
Yes, sir.
Yes, but doing the background check of the promoter of the company, this might have happened. Now, why everything is pointing towards the reason behind doing the buyback? Because past history was such that, right? Okay. Getting back to this, so when would the company would be paying the regular dividend? Regular dividend they will be paying no, the consistent basis pay only when the company is expecting that they would be able to pay the same dividend for the coming years also. Correct. For 16, 17 and 17, 18. Can I say that was the period when TCS was having very low and the consistent dividend? Yes, no? 1920 onwards, can I say they started increasing the dividend? Yes, no? Yes, no? Can I say that shows nothing, but that shows that company is now expecting a better revenues, better dividends in the coming period. Would you agree with me? Yes, no? I'm not talking about the special dividend, no? Ignoring the special dividend. Do you want to check it again? Let me just share the dividend chart again. Look at this. Earlier, the dividend was 4 rupees, 5.5 rupees. Yes, no. 2014. Are they paying interim dividend of 5 rupees only? Yes, no. Yes, no. Can I say they shifted from 5 rupees to 5.5 rupees, 6.5 rupees, 7 rupees, again 7 rupees, and now 8 rupees? Can I say even the final dividend is increasing? Yes, no?
Yes.
Yes. So what does it show? Can I say it basically shows that since last few years, because of better, better technology adoption, now people are spending a lot, and regularly there is an increase in the cash flow is expected. So till the time companies are not very sure that whether they will be able to continue to pay higher dividend or not, they will not increase the dividend. Dividend will become very stable. Can I say if dividend is becoming stable, it becomes foreseeable? Yes, no. If it is foreseeable, correct, easily forecasted or equal to the estimated, can I say your work becomes very easy? Kaise? All the hard work that you do to forecast the dividend, remember, by way of creating a financial model in equity D1, D2, D3, you had to forecast. Yaad hai? If they are paying the
Yes,
same
sir.
amount, if they are paying the same amount, can I say the work will become very easy? The companies loot cutting dividends unless they expect that the lower level of dividend would reflect long run poor perspective of the company in the future. If the company is decreasing the dividend, as soon as they start paying the lesser dividend, it will be considered negative sign to the shareholder. The information conveyed by dividend initiation is very ambiguous. It's a confusing one, not very clear. One hand, the dividend initiation could mean the company is expecting and very optimistic about the future. On the other hand, can I say when you're distributing all your profit as a dividend, that means company is not looking to have further growth opportunities in the market. Yes, no. Yes, no. Growth opportunities are very less. Can I say, and that's why there is one positive signal and one negative signal. Yes, no.
Yes.
Hello? Yes. There could be unexpected dividend also. An unexpected dividend increase can signal the investors that company's future business prospects are very strong. And that's why the managers are sharing the success with the shareholders. The companies with a long history of dividend increase are dominant in their industries also and have higher returns on the sales, as well as they are able to maintain lower debt to equity ratio also. Why lower debt to equity ratio? Can I say they would be able to generate maturity of their money required from the equity only? Yes, no? Or their existing profits only? Would you agree with me? Yes, no? Also, when it comes to lending the money to these companies, can I say many equity holders will be available? Yes, no?
Yes.
Correct? Yes. When there is unexpected dividend decrease or omission is taking place, omitting the dividend, then what would happen? Negative signal that the business is in trouble. Management does not believe the current dividend payment can be maintained. In rare instances, however, a dividend decrease or omission could be a positive sign also. How could that be a positive sign? It could be positive sign because of first reason. क्या हो सकता है? Can I say management may believe that there are near-term positive investment opportunities might be available? Yes or no? Yes, no?
Yeah, some projects where they can invest that cash.
Absolutely yes. And इसका एक example देता हूँ. Now you all know how to look at the balance sheet, correct? P&L and the financial this cash flow statement. There is a company named Tainwala Chemical. Aware of it? Yes, no? Tainwala Chemical. How many of you have heard the company's name? Tainwala Chemical. Is there anyone? Tainwala Chemical. Again, it is not a buy recommendation or sell recommendation, nothing like that. Just for the case study purpose. Is there anyone? Acha. How many of you have heard the company named Samsonite?
Yes.
What does the company does?
It's in the manufacturing of
Bag
these
manufacturing.
suitcases and bags.
Perfect. So American Tourister basically. That
Yeah.
brand is under Samsonite. Agreed? That
Yeah.
Samsonite business is international also and India also. Samsonite International is having holding of 60%. 60% in Samsonite India. And remaining 40% is there with Tainwala Chemical family. Correct? American Tourister Samsonite is not a listed company in India. Aware of it? Huh? Yes, no? Unlistedly, they are having the 40% holding. Can I say Tainwala Chemical family owns the 40% of Indian operations? 60% is by Samsonite International. Is there any other people who can invest in the company? No other investors. Simple. Tainwala Chemical Private Limited, that company, Tainwala Chemical, a listed company, is investor in Samsonite India with 8.5%. Company is making a profit, Tainwala Chemical, but they are not paying any dividends. They have been investing in the Samsonite American Tourister. They have been a long-time investor. Correct? Does this case scenario looks very interesting one? Yes, no? Yes, no? I would suggest all of you to go through the balance sheet. And balance sheet maybe must go through note 5. Must go through note 5. A table of all the investments where the company is investing the money. Are you aware that NSE stocks can also be purchased? NSE, National Stock Exchange case stocks are also being traded in the market. Yes, no? Aware of it? Yes, no?
Yes, but in the unlisted market.
It's an unlisted market. Absolutely right. Tainwala Chemical has been investor in NSE stocks also. Now, what does the Tainwala Chemical does? They are manufacturing the PVC, polyvinyl, right? Can I say PVC is very useful for making the bags? Yes, no. PVC is very useful for making a bags. Would you agree with me?
Yeah.
As a raw material.
Yeah.
The one of the largest market shareholder is American Tourister, Samsonite India, in which they are having 8.5% through Tainwala Chemical, company itself, and remaining shareholders are also Tainwala family only. What would be happening? Manufacturing the PVC, supplying it to the American Tourister. Can
Basically
it happen?
controlling the company.
Right? I would suggest go through the balance sheet, how they have made it, and specifically look at the investments. Right? It's very important to look at it. They have not been paying the dividend. Reason? Of course, they are investing within the other businesses like NSC. Samsonite is also one of them. There is some other company also named Periwinkle. They have been investor in many other banks also, stocks also, and they have been investing a huge chunk of money in mutual funds also. Correct. What does it show? Can I say they are expecting that rather than paying up the dividend, I should be investing my money so that the wealth of the shareholder would increase? Yes, no. Yes, no. Yes, no. Now again, in this case, they are investing in the other business. Agreed? So can I say the reason is very different than the increasing the shareholders' wealth? What do you think? Do you think the reasons are very different than the shareholders' wealth? Yes, no.
Yes.
Yes. So it's a good case study to look out for. It is not always the same as you look at it. Correct? The reasons may be completely different. So that's why I'm saying it's a positive sign also. It could be negative sign also. Positive sign kaise? That the management is expecting to invest in your own business and growing it. Correct? And there are chances that management might be investing in some other business also, which is not a good sign also. Agreed? Yes, no. It could be working as a negative sign. Clear? Yes, no.
Yes.
Yes. So this is what you should look at while investing, while having a dividend policy. Correct? Why dividend is increasing, why dividend is decreasing, why it is being omitted also. What is the reason? Explaining the agency cost. What is agency cost? Stakeholder management का explain किया था, remember?
Yes, when there's a
Conflict of
conflict
interest.
between, yeah.
Perfect. Now, if you are a shareholder, what would you like to have? Better valuation for the company? Now, how would we be having better valuation? Can I say if you start some project which is having higher net present value, would you be happy as a shareholder? Yes, no.
Yes.
Yes, we all would be happy. Agreed? Yes, no.
Yes.
I'm just adding one sentence to this. Huh? What if I'm saying that you will be having higher NPV in the present value terms, but the cash inflow, any benefits from the project will start after 10 years only. Now, would you be happy?
No.
Why? For 10
So
years,
after 10 years.
PNL will be low. For the 10 years, Bino is absolutely right. The profit and loss statement will be very low. Yes, no?
Yes.
Yes. So agency cost reflect nothing but the inefficiencies due to divergence of interest between managers and the stockholders. One aspect, that is there with the managers and the investors many times, that managers would like to invest maximum amount of money or reinvest in the business to grow it. Correct. This may lead to investment in some negative NPV projects also and positive NPV projects also. One way to reduce agency cost is to increase the payout for the free cash flow as a dividend. Would you agree with me? If I'm just sharing out straight with a higher dividend, then agency cost ka issue hoga kya? They don't have the opportunity only to manage your money. Would you agree with me? If they have already paid you the higher dividend, would the managers get a chance to manage your money? No. Agreed? Yes, no. Yes, no. Confusion or understood? Hello? Can you hear me?
Can you repeat that part, please?
Sure. If I'm saying that rather than keeping the money with you, you should just focus upon paying the higher and higher portion of profit as a dividend. Can I say if the higher amount of money is distributed as a dividend, will it make any chances or will it allow any of the manager to decide what should happen with your money? Should it be invested? Should it not be invested? In which project it should be invested? Is there
No.
any option available to the manager?
No.
If there is no option available to the manager, will there be an agency cost? No.
No.
Generally, this would make sense for a growing firm to retain larger portion of their earnings also. Mature firms are relatively very non-cyclical industries. They do not need to hold cash and they will be able to pay out the cash. Agreed? In this case of non-cyclical industries, higher dividend payout would be welcomed by the investors, which would result in stock value also. Higher stock value. Clear? Yes, no?
Yes,
Solution
sir.
is paying up the higher dividend. Binoy, clear? Binoy, clear?
Yes.
Yes. Going ahead, the stockholders and the bondholders, the long-standing quarrel. Correct? If the firm is financed by debt and equity, there will be stockholder and the bondholder. Can I say bondholder are looking at short-term money-making business? Why? They want their interest in the capital. What stockholders are looking for? Long-term, value-oriented business. Agreed? When there is a risky debt outstanding, the shareholders can pay themselves a larger dividend, leaving the bondholders with very lesser asset to pay off the capital and the interest. Would you agree with me? Yes, no? Can I say shareholder wants a dividend? Now, if the next year company doesn't make good profit, it makes a loss, would they be able to pay off the debt? Would they be able to pay off the debt? If the company is making a larger losses next year, would they be able to pay off the debt? Yes, no?
No, sir.
Default will happen. If the default is taking place, can I say bondholders are not happy? Yes, no? The way there could be transfer of wealth from bondholders to stockholder because of the dividend, typically the agency conflict between stockholder and bondholder is resolved via provision in the bond indenture. The provision may include restriction on dividend payments also. Maintenance of certain balance sheet ratio also. In level 1, we used to name it as bond covenants. Remember the limitations on issuance of the securities? Yes or no? Aware of it?
Yes.
Yes.
Yes, sir.
These are the limitations. Going ahead, the factors that can affect dividend policies in practice. A company's dividend payout policy is the approach a company follows in determining the amount and the timing of dividend payments to the shareholder. 6 primary factors are there which we look for. First one, investment opportunities. Can I say if you don't pay out the dividend, that means you're looking at retaining the money and investing it in your own business? Yes, no?
Yes.
Can I say when you're looking at expanding the business or investing back in your own business, you must be having a positive NPV, investment opportunities must be available. And to speed up it, and to speed up the opportunity taking position, can I say you need to have cash in hand? Yes, no?
Yeah.
If a firm is facing if a firm faces many profitable investment opportunity, can I say it might have to react quickly to capitalize the opportunity? And because raising the money again from the equity market will take longer time, so that can I say companies may like to retain higher amount of cash with them, so that as and when needed they can get the money and they can utilize it. Agreed? Yes, no? The second factor, expected volatility in the future earning. Can I say if the company is looking at lower cash flows or lower cash generation business in the next year, can I say rather than paying the dividend, I would like to hold on to the retained earnings? Yes, no? Yes, no? Correct? When earnings are volatile, the companies will be much more reluctant to change the dividend payout policy, because they know that after a certain point of time, if it's a cyclical firm, what will happen? Lower earnings? Yes, no? Can I say they won't be able to maintain the higher payouts in that case? Would you agree with me? Hello?
Yes, sir.
Yes. Energy is low today. Is it so? Or it's like we are just entering, about to complete the third hour. So is it the effect of that? What's the reason?
About to complete the third hour.
अच्छा, okay, ठीक है, चलो. तो how much do we have quotation cost? ठीक है.
How
Okay,
many
let us
more
do one thing.
slides?
Huh?
How many more slides?
Many more slides are there. We have
Many
just
more.
begun with CI today. How can you ask how many more slides are going to be there? There are many more slides to be discussed, right? So, okay, sure. What we can do is, can we just complete this topic today? Yes, no, with the same energy level? Yes, no? And then we may stop for the day if required. Comfortable, everyone? Yes, no?
Yes, sir.
This is happening because it's a first session. Tomorrow onwards, we'll be going for 4 hours only, right? Tomorrow onwards, we won't be stopping for the 3 hours, right? Today only, we are allowing the same. Okay?
Yes, sir.
Yes. Okay. Now have a, back to that energy level, right? I want full participation. Yeah. Okay. So the third reason was financial flexibility. What is financial flexibility? Can I say when you are having bird in hand, you have flexibility that how you want to utilize it? Yes, no? The firms with excess cash desires to maintain financial flexibility. Can I say they may look for stock repurchase also instead of dividend? What is the benefit of stock repurchase then? Cash to utilize hoga na? Yes, no? How would stock repurchase help them? Anyone? What do you think?
Could you repeat that
Sure.
stock repurchase part?
Sure. The firms which are having excess cash flow, they are looking forward to maintain a financial flexibility. Correct. When they are not paying out the dividend, can I say retained earnings will keep on increasing? when they are
Yes.
having
Yeah.
major chunk of retained earnings, can I say they may proceed for the stock repurchase that was done by TCS in the year January 2022. Correct?
Okay.
So
Yeah.
how would it benefit them?
Because eventually stock price would be higher in the market if a company buys back, तो better image create होगा शायद market में positive reaction. But
Okay. But that is
eventually
going to be the
it
short
will
term.
help the investor, like
It is
within
going to
the
be the
company.
short term, right? Not the
Yeah.
longer term. Yeah. The long term, there should be some change. Chalo. Supporting what you are saying, if I want to do the short term change, can I announce the higher dividend? Yes, no. Can I
Yeah.
announce 120, 130 rupees dividend in the TCS stock and still the prices of TCS will increase? So that can
Yeah.
be done with dividend also. How would the repurchase help? Can I say
So,
because of
but
repurchase?
यहाँ पे like currently if you announce a higher dividend, so basically investor is getting that dividend. But when you
Correct.
repurchase, eventually the dividend is coming to you only.
How is it coming to me?
As in, I'm saying ki you don't have to pay out to other people in the company. Basically, you are working for that dividend earning, and the
No.
company is going to get it. Matlab, when they repurchase.
In repurchase, you have to maintain a higher cash outflow compared to dividend. Because
Yeah.
how much money you are paying by dividend? तो बोले this year का जितना profit है, that only.
Yeah.
When you're going for the repurchase, you have to pay larger chunk of money because you're buying back the whole share.
Yeah.
So for TCS, if they're paying up the dividend, they have to pay only 100 rupees, 120 rupees per share. Correct, in the last 1 year. And if the year back when they came up with the buyback, they had to pay 4,500 rupees per share. Correct.
Yeah.
45 times money that is being spent. Best benefit to the larger shareholders. Can I say next year onwards, number of shareholders have declined? Or EPS will increase? Yes or no? The existing major shareholders will be benefited next year onwards with
Yes.
higher dividend, higher EPS. Yes. Getting me?
Yeah.
Since the stock repurchase plan are not sticky, every year there is not going to be the stock repurchase program, correct?
Yeah.
Can I say due to this, people are also not expecting the proper dividend every year or proper payout every year? If next year company doesn't make a profit, you don't go for the stock repurchase, right? Can I say having good cash on hand would afford the company's financial flexibility to meet unforeseen operational needs also and investment opportunities also? Can I say financial flexibility is especially important during the time of crisis, which helped TCS and many other companies when liquidity would dry up. Correct? It's very difficult to find out the credit, or if the credit market becomes very costly, which is currently happening with the interest rates. Agreed? The fourth factor that can affect dividend policy. First two कौन से थे? First was investment opportunity. What is the other opportunities available? Second one is expected volatility in the future earnings. Third one is financial flexibility. Fourth one to consider is tax consideration. Investors are considered about very much concerned about after tax returns also. Investment income is taxed in most of the countries. The way that dividends are taxed would vary from country to country. Correct? The taxes applied on dividend have significant impact on the dividend policy also. In countries where capital gain is taxed at favorable rate, can I say dividend will be higher tax? Yes, no? And higher tax bracket individuals would not like to have dividend because they have to pay higher taxes. Would you agree? Can I say in that case you will be having lower dividend payouts? And for those countries which is not asking for the higher tax on dividend, वहां पे क्या होगा? Higher dividend payout ratios. Agreed? Yes, no? Yes, no. Apeksha, Binoy, there. Kannan, Ketan.
Yes, sir.
Yes. So a lower
Yes.
tax rate for the dividend compared to the capital gain does not mean the companies will raise their dividend payout every time. The stakeholder may not prefer a higher dividend payout also, even if the tax rate on the dividend is more favorable. Still, they may not like it. Reason: can I say tax on dividend is paid when the dividend is received? Agreed? Capital gain when you have to pay when you are realizing the capital gain, then only. Yes, no. Can I say in case of dividend you may have to pay early tax? Time value of money is being involved. Yes, no.
Yes, sir.
Yes. The cost of basis of shares may receive step up in the valuation at the shareholder's death. Correct. So in case if in India you are receiving the shares from your ancestors, you get the step up amount, or inheritance tax is very low in India and many other countries also. Can I say instead of that, if dividend is given, what will happen? You will have to pay the taxes immediately. Yes, no. But if it's a ancestral property received, can I say inheritance tax will benefit you? The tax exempt institutions such as pension fund and endowment plan, they will be indifferent between dividend and the capital gain. For others, it will matter. Clear?
Yes,
The
sir.
fifth factor, that is a flotation cost. When the company issues a new share, which is common stock, the flotation cost has to be incurred 3 to 7%, which is taken from the almost amount of capital raised to pay for the investment banker. The cost associated with the new stock. Since retained earnings have no such fee, the cost of new equity is higher than the cost of retained earnings. Larger companies would typically have lower flotation cost because higher flotation. Because of what reason? The larger company will have lower flotation cost.
High quantity.
High quantity, correct. And the higher the flotation cost, lower the dividend payout, given the need for equity capital to be positive NPV of the project. The sixth factor, that is contractual or the legal obligation. The companies will be restricted from paying the dividend either by legal or by way of debt covenant. Correct? Implicit restriction caused by cash needs of the business. Common legal contractual can be first one, impairment of capital rule. What is impairment of capital rule? Legal requirement which is there in many countries mandates the dividend paid cannot access the retained earnings. The dividend payment cannot be more than retained earnings, right? If your retained earnings is less, can you make a payment of dividend? No. You will have to compulsory first increase the retained earnings and then only you can pay the dividend. What is the need for this kind of thing? Liquidity will be automatically maintained in all the companies. Default will be less. Yes, no. Yes, no.
Yes.
Second one is debt covenant, designed to protect debt holders and dictate things to company what they should do and they must not do. Many covenants require a firm to meet or exceed a certain target for liquidity ratios also, such as current ratio, coverage ratio, such as interest coverage ratio also, before they can provide for a dividend. Clear hai tak? Yes, no. Everyone is clear to this point? Yes, no.
Yes, sir.
Yes. Okay. So with this, for today only, we are concluding, or stopping our session till this point only, right? Learn something new for the day? Yes, no.
Yes.
Yes,
sir.
some value addition has been done. Yes, sure. That's great. Perfect. Yes, we know you have two
Vimal,
doubts. Huh.
Yeah.
Go ahead.
Actually, one is not a doubt. First one is the doubt. Could you please repeat the portion of bird in hand?
Portion of?
Bird in hand.
Okay, bird in hand.
MIND.
Bird in hand.
Yeah.
Sure.
Yeah, bird
Sure.
in hand.
I'll do it. Yes. And what else?
The rest is that first of all, I forgot to congratulate you about the CFA charter holder being a CFA charter holder. I know you have passed recently level 3.
Huh?
So congratulations for that. And I would like to know the
Thank you.
complete procedure.
For?
The complete procedure, the formalities, all of them.
Okay. Right. So the okay. First, let's go with the bird in hand. Then we will be going up with the other one. Correct?
Yeah, yeah.
Okay. Sure. So here is the कहाँ गया? Yeah, the bird in the hand. So what MM model suggested? MM model was saying dividend is irrelevant. Correct. Whatever is the policy that you adopt, it is not going to affect the cost of equity at all. Agreed? Till that
Yes.
point, you are clear? Yes, no?
Yes, yes, yes.
And they are saying that because there is dividend is irrelevant, there is not going to be any impact on the the cost of capital. Bird in the hand theory was given by Maron Gordon and the John Littner. They said that whenever the dividend is paid out, cost of equity is declining. What is the reason? The reason is very clear. Let's say, in case if hello,
Yes.
can you yeah, okay. In case if I am paying you the dividend today itself, can I say it's very certain? Yes, no. Risk is low.
Today itself, yes.
Today itself, the risk is low. If I'm planning to reinvest this money in some other project,
Okay.
in that case, can I say I'm looking forward to have a uncertain cash flow in future?
Yes.
Yes, of course, the profit could be higher. You are going to receive a better dividend in future only. But can I say uncertainty is high? Because
Correct.
the uncertainty is high, can I say cost of equity may increase?
Correct.
Correct. So they are
Yes.
saying if you are paying the dividend today itself, it will be better and you will be having lower cost of equity. That is a bird in the hand theory.
Okay.
Clear? Bird in the hand of the
Yeah.
investor, basically. Yes.
Okay. Okay.
And second thing around the charter holder that you said, correct?
Yeah.
So obtaining a charter will first require you to, of course, the filing out for the this IPS statement again. After that, you need
Okay.
to require to, of course, have a 3.5 years of work ex. So we call it
Yes.
3.5 years of work ex. Based on they require 4,000 hours of relevant work experience.
Can
4,000
you
hours.
define? Yeah. Can you define relevant work experience?
Yes, they have given a rules that are done by you. Correct. So which is the
Yeah.
role that you are employed into currently? You will have to choose one of those roles. Correct. Let's say, for example, a person is there who is working as a broker. Correct.
Okay.
Now, broker has two roles. One, of course, the managing the portfolio for the client to a certain extent, advising the client, and the other role is just generating the brokerage, sales and marketing. Right.
Okay. Yeah.
Now they are also asking you in detail that if you have worked since last 10 years, but out of that daily business pay, how much percentage of the time you are involving in the portfolio management? If you say my 50% of the time is portfolio management, 50% is marketing. So in the last 10 years, if you have worked for 10,000 hours, they will take it as only 5,000 hours.
Okay.
Getting me? So
I got
4,000
you.
hours is the basic, but that is the working in the portfolio management only. If you have worked for, let's say, 10 years, but in 10 years you have contributed 10,000 hours, but you are able to that relevant work experience is 20% only, you will be awarded the charter, because that goes to 2,000 hours. 4,000 hours must be completed, right? And To certify this, they are asking for the references. Correct.
Okay.
From the people you know. Yes.
Who
They
can
ask
refer
for the,
you?
so there are there are three referrals are required. Correct. You can
Yeah.
refer to anyone. Correct. You can give the reference of any people. They will have to
But
file for you.
but those people who refer you must be holding some kind of position, right?
Yes, absolutely.
As chartered accountants or other CFAs. That's what I'm asking.
Yes. So when you are looking at charter holders, then you require just two reference.
Okay.
If out of these three people, any one is a charter holder, then you require only two references. If you say that none of them are charter holder, then you require three referrals. And as soon as they certify that you are, of course, involved in the same work, correct, then in that case, you will be awarded charter. So before that, they also want you to describe all the answers. Correct. Answers basically what you do on daily basis, how you are managing the portfolio, what are your roles and responsibilities, where you have been working. All things have also to be filled up.
Okay.
Yes. And then you are awarded, then the reference things comes in. And then based on the approval, the CFA Institute will review your application. And then they will award charter.
So they will
Also,
cross check with the people who refers you.
yes, they can. Yes. Correct. So this is the process that is to be followed. And of course, at the last stage, you will be asked to make a membership fee payment. That is nearly $100. Yeah.
Okay. And we got to do anything with the local CFA society?
Yes, absolutely. So you also need to get yourself registered separately with CFA Society in India. For India, it is CFA Society India, which is working, which is charging around 3,000 rupees annually, right? Plus the GST things, yeah. And there are many benefits, in fact, I would say, because